Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Paul, how's it going, buddy?
How you doing?
I'm good, man. I'm good.
Yeah. You've
Yeah.
got some news.
Yeah, we finally found a house. We got a purchase agreement signed on it, and June 1st move-in date.
Yeah, that's
So,
exciting.
Yeah, perfect. Right at the beginning.
Finally
of
going to
summer.
be out under the same roof, and it's a nice brand new house. Dave sent me the link to it. It's a beautiful home. And,
Yeah.
And of course, we don't have Dave to thank, right? Like his wife obviously has the taste, and he never would have, bought a house like this before. So
That is 100% truth.
yeah, that's true.
Yeah, but be moving in right at the beginning of summer for the kids, and
Yeah.
I work from home, so that'll be pretty awesome. With 7 kids at home, we'll see how
Do
that
they
works
have
out.
do they have like EBT platinum internet over there, or is it?
It'll be a lot. It'll be a lot better than what I've got over here. I couldn't even. I was trying to pull up that Zillow to show Paul, and I couldn't because I had Zoom going. So yeah, this neighborhood is awful for internet.
Yeah.
So yeah, that'll be an upgrade. But yeah, I got to figure out the summer situation, man. With all the kids at home, maybe just kick them
Camps.
outside, lock the door, throw some sandwiches and some water out there, and say,
Yeah.
see you at 5.
Yeah,
Yeah. We'll have two
build them
16-year-olds.
like 7 different potato guns and say, go out in the woods and
Yeah, just come back
Have
with,
at it.
with all of your eyeballs,
get some iPro.
and I'll be happy. Yeah, there's a neighborhood pool, so I'm sure they'll be spending a lot of time there.
Oh yeah,
Yeah.
Awesome.
Yeah.
Well, that's good. I know it's, part of our episode today is going to be, it's going to be about family banking, but it's, you and I have both, gone through a mortgage process this year. We're both still in it. And that's kind of what inspired me to text you that today. I was like, what a pain in the butt it is. And it
Yeah.
was, it wasn't like this in 2006. Then you had 2012 Dodd-Frank, I think. Don't quote me on the year, but that's pretty close. And that really complicated the regulatory environment for lending, and just
Yeah.
makes it so difficult to get a mortgage, especially if you're a guy that has money all over the place.
Exactly. Yeah, I was going to say, what else complicates it is 1099 income.
Yes.
So, I mean, when I was the first mortgage I ever had was I was just straight W-2. That's the only income I had. Pretty simple. Pretty easy to provide your tax returns and your latest pay stubs. Now, with multiple different businesses and revenue and all these different businesses and a little bit of W-2 from the guard and all that, then they're wanting 2 years of business, 2 years of K-1s, 2 years W-2, pay stubs from W-2.
Yeah. So I had to reach out to you the other day for a K-1.
Oh, that's why you
Or no,
needed
the
it?
actual returns. It was the actual
Yeah.
return they wanted. I was like,
Yeah, that's
yeah,
right.
the K-1 wasn't good enough, of course. They have to see all of it.
Yep. Yeah. So, and then it's like, oh, hey, we also need another car because we got a 16-year-old, and it would take such a load off to have a family car that he could tow the kids around in.
Yep.
But can't buy a car right now until we close because that'll screw everything up.
Oh, yeah. Don't move money.
Yeah. Don't.
Even if it's
Basically-
between your accounts, it's like, why did you move this money? I need an explanation.
Yeah. Or where'd that money
like-
come from? Was it a gift? Did somebody give it to you? Was it a loan? You got to pay back. Yeah. Yeah. It's pretty painful. Yeah. So it'd be nice to get that done because honestly, I think this is the last time I'll ever get a mortgage. I think by time I need another one, I move out of this house, which I don't foresee that happening for 10 years plus, then, I'm going to be set up. Our banking system will be set up that we'll never need to do that again. That's my plan. Because it doesn't matter how good of a mortgage lender you have. Mine is great.
Yeah.
The guy's super knowledgeable. I'm happy to recommend him. He can work all over the country. In fact, he's somebody I've known since childhood, so I know what kind of person he is also. He's great, but that doesn't simplify the process because,
Nope, because there's some mortgage underwriter asking him for, hey, I need that K1, right? I need this or I need that.
Yeah, and they don't really understand business income so well. So, I mean, I had to hustle and get my taxes done this year.
Right.
So, and thankfully I did right in time and made the offer. There's another offer. I think they even offered more than us, but they like some other things about ours better. So,
well, that's good.
It worked out. Yeah, glad I went that route and ended up doing that early this year.
Hey, zoom in close to the camera real quick.
Why?
I don't know. Did you hit your nose?
Yeah, so I have no idea what happened. I've got this red, like my nose started bleeding right in the middle. We were at a baseball, beginning of the season get together, and when I went there, my nose looked fine. When we left and I came home and looked in the mirror, it was bleeding, and I don't remember anything happening. So It's very confusing. I don't know what happened. And it's not healing. It's just like a bright red mark. So
I didn't mean to point it out. I was just like, what is that?
Yeah. You got me. Maybe it just comes with age. Things happen when you get old.
Well, it gives me something to stare at.
Yeah, there you go. You're welcome.
All right. Enough baloney. The mortgage process, we'll probably dovetail around to that again. But so family banking, Dave. We've been asked to do an episode on this a while ago from a listener, and we're finally getting around to at least unpacking it a little bit.
Yeah. Yeah. And I know we hit on this a little bit, a little over a year ago at the IBC think tank in 2022, when we had somebody who presented, our Canadian colleague over up north, Jason Lowe, talked about his family bank, and it's very impressive. Yes. He was able to build a house with cash, with the insurance company's cash.
That's right.
And guess what? Every payment he makes back to it is principal. Like, how cool is that?
Yep. Also correct. It's also impressive and he obviously has a pretty tight knit family, which is helpful, but he's got, his siblings involved. Mm-hmm. And in some cases, the generation before him, I know he talked about his dad and some other folks. So they've got multiple, and of course, the children. He doesn't have any grandkids yet because his kids are little, but eventually, obviously they'll be tied in as well. But you get 3 generations of people across, an extended family really participating, not just the people that live in his household.
Yeah. And that's, man, I got to give him a lot of credit for being able to pull family in, because sometimes that's the hardest nut to crack. I finally got my siblings coming around and they're all interested now, but I've been doing this for 5 years. So it's
well, some people are slow learners.
Yeah, right. And they're not listening, so I can say whatever I want. No, but I'm happy to see him coming around and really grasping onto this and reading the book and being like, wow, that's really eye-opening. I'm like, yeah, I think I told you about it 5 years ago, but it doesn't matter 5 years ago or right now. 5 years ago would have been better, but now is the next best time to get going and make that change for your entire family, not just you. Yeah.
It makes you think. I'm starting to, speak with some of Tammy's family about this stuff, and starting to pull kind of onesies and twosies into the fold just to show them the power, the power of it, and not only the family banking aspects of it, but the later in life, the passive income streams that you can take off a policy or a series of policies, which is phenomenal.
Right.
And, reading Nelson when he tells us, or when he asks you, would you object to putting more money into a system if you knew you could get it all out on a tax-free basis? And of course, nobody's going to object to that, right?
Right.
But it's just, you've got to dig in, you got to educate yourself first and foremost. That's the toughest step, quite honestly. The life insurance policy is easy. assuming you're insurable and can get underwritten. But the mechanics is simple. This is the simplest thing you could ever do.
Yep. Absolutely. Yeah, education. Again, that's the number one thing. So read the book. I actually had a client just reach out to me and was like, hey, I got the book and I just read it. And I was like, man, I really failed you. How did I not know that you didn't read the book?
Maybe he was like an early client or something.
It was a couple years ago. Not the earliest. He was a referral from a very early client. But
yeah.
I guess maybe I just assumed at that time that he had read it because he understood it pretty well.
Sure.
But, reading it, now he's got all sorts of new questions, which is great.
Yep.
Yeah. So, yeah. But let's go back to family banking. Like, why? Let's paint a vision of, I think probably most listeners have gone to the bank for a loan of some kind, whether it's student loans, a car loan, or a home loan. You've probably gone to the bank and worked with them and had to underwrite, get underwritten, and give them every bit of information that more than you've ever given anybody for anything, right? Just to get that loan. Because
for the mortgage product specifically, I would say.
Yeah, absolutely.
Because I can get USAA to approve me for a car note like over the phone. Like, on literally not talking to a human, like literally on the phone, right?
On your app.
On the app.
No, that can happen pretty quick.
Approved.
They see your bank account. They know how much comes in and goes out every month.
Yep.
So they know what you're capable of performing.
AMX Platinum has purchasing power. It doesn't technically have a limit. So you can there's a button that says check your purchasing power. And I've extended that purchasing power upwards of I was just saying, let's see how high it can go.
Oh, really?
And it was like $75,000.
Really? I didn't even know that.
It was really, I was like, look at that.
Yeah. I've got like 3 credit cards and I only use one. I use the other 2 occasionally for small charges just to keep them active, I guess, just to make sure there's a charge on there and then pay it off just to keep that credit alive.
Yes.
Sure. Yeah. So, but let's paint a vision. What if you never had to go talk to a mortgage lender? Nothing against mortgage lenders, but never had to talk to anybody asking you for all this information again. You never had to wait and wait and wait and then finally get an approval letter to give to your real estate agent that proves like, yes, I've got the capability to buy this house. Or, you miss a good deal because you don't have it available. You miss a solid interest rate. Like if I would have had it in January, I could have made an offer in January at less than 4% interest rates. What if you never had to do that? What if it was as easy as, let's say think two generations from now, your grandkid comes up to you.
Paul II.
Can you skip a generation and do a second?
Yeah, he'd just be the second. He wouldn't be a junior.
Okay,
I'm thinking it's going to be. I don't want them to do that.
It's probably going to be Anthony Jr. Like the Sopranos.
That's right.
Yeah,
Little Tony.
My middle name is Anthony.
Yeah.
Yeah, you knew that.
I do know that.
Yeah. So let's say little Tony comes up to you, goes, Grandpa Paulie, because that's what they call you, not Paul, Paulie.
That's right, Paulie.
Yeah. Hey, I'm going to go buy, my wife and I need a house. Here's how much money I make. What do you think I could borrow from the family bank? You do the underwriting. You say, here you go. Here's the terms. And they make it happen. Like, how easy is that?
Oh, it's when I think to my own story and your story and how much time, just interrupting your day, having to dig up some document, even though you've already sent 75 documents over 100 separate pages plus of crap to this person that you'll never meet, just so that they can give you the loan, in which you can afford, by the way.
Right.
So that time, minutes turn into hours into days, right? There's other things I could have been doing. I could have been spending time with my children or talking to a new client or something else other than digging up tax returns and digging this document up. I could have been doing something else. So I think the time aspect for me is huge because it annoys and I've talked to you about it before. I am so annoyed by the whole process, and I'm going to have to go through it again next year for the construction loan. And it's just, I hate it.
Yeah.
I hate every second of it.
Tell us how you really feel.
And the people asking you for the documents aren't the underwriters. They're just your loan officer, like your buddy there. I've had multiple apologize to me in the last 3 years. Paul, I know, I'm sorry. This is awful.
Yeah.
You know, literally, like I missed one thing for one of the business returns, like one page, which apparently had info on it they needed, I guess. I don't know.
Yeah.
You know, page 4 or 5, which is whatever. And so the benefit to the following generations is going to be huge. Like I plan on financing my kids' college like that. You know, them borrowing money from me to cover the spread if they decide to go, you know, get a degree in English or some
liberal arts
like their dad.
Yeah.
So yeah, just a huge. They will be at such a huge advantage to 99.9% of their peers. Bottom line, and everything that they're doing is compared to what their peers are doing. Right, Nelson Nash.
Yeah, and what a great way for you. Like this is a retirement plan for you too. Think about that. What if you could live off of the interest of the loans that you're making to family members? Now, I know there's some biblical principles about don't charge family interest and all of this, but if you're treating it like a family business, then, you know, and if people want to play within the family business and use the family business, they need to be believers in it and they need to understand it and why they're doing it that way.
So quoting Proverbs, page 71 in Nelson Nash's book, a good man leaves an inheritance for his children's children.
Yep.
1322. So part of the mechanics behind the family banking, Dave, right, is yes, I'm taking passive income off that loan, let's say for little Polly. But I'm also, maybe some of that money is going to PUA. Maybe it's going to a new policy on my life or his dad's life or his mother's life or his life, perhaps, right? So they will benefit.
Yeah.
They're benefiting from not having to spend hours and hours getting a loan from, you know, by the time he's there, it'll be like the First Bank of China or whatever.
Yeah. Right.
Right?
Yep.
And the dollar, which is, you know, in free fall here. So yeah, just a huge advantage and just in time savings alone.
Yeah. Yeah. And time's valuable. I'd much rather, and nothing grinds my gears like wasting time. Like today, I didn't know my son didn't have school, right? His mom dropped him off at school. I went and picked him up today. I'm the only person in the parking lot. Like I wasted 15 minutes there, 15 minutes back.
Yeah.
Right. It's my own fault. I should have known, but nothing grinds my gears like wasting time.
Where are these children at?
All I think is, what could have I been doing during that time? Like I could have been so much more productive with that 30 minutes. Yep. Luckily, I made it more productive because I called you and complained to you, and then we talked.
Yeah, that's always productive, talking to Paul on the phone.
Yeah, talking to Big Paulie. Yeah. Yeah. So, but I think kids need to, this will be really exciting as they get older, is teaching them how that family banking system works. Like my son, he's done a great job. He's got he's got a few $1,000s saved up for a car that he wants to buy like the day he turns 16, I'm pretty sure.
Which is coming up.
Yeah, 2 months. So 2 months we'll have another 16-year-old in the house. And, you know, super responsible with it. But I'm going to show him how we utilize these policies as a banking system. So it's going to be pretty cool.
Yeah. And I think Jason's example was similar, but it was like his nephew or something.
Yeah. And I think he says everybody pays 10% interest.
Yes.
Like that's the rule. If you want to borrow from the family bank, you're going to pay 10% interest. You're going to pay it back at a 10% interest rate so it gets paid back quicker. Because like Nelson says, if you would pay somebody else's bank 5%, why wouldn't you pay your own bank 10%?
Yeah, I like my bank to be as profitable as possible. And again, folks, you know, part of this is, I guess, psychology, Dave, right? Like I'm used to receiving this or giving that payment. He's used to receiving that, Big Polly's receiving that payment, and he's used to doing something productive with it. One, paying back the policy loan, maybe two, once that policy loan is satisfied, paying additional premium, or maybe he's doing some sort of combination of those things simultaneously.
Yeah.
The banker can do whatever he wants. Those are kind of that's probably going to generate a bunch of questions like, which one would you do, Paul? I'm like, well, it depends what's going on, but
yeah.
I like the idea of satisfying that loan maybe and then opening up another policy with
Yeah,
it. But
because once you've satisfied that loan, what have you developed over that maybe 3 or 4 year period?
A great habit.
A habit of saving. Like my son's going to be on a repayment schedule, and maybe it's $200 a month. He's now done, a couple of years of paying $200 a month, satisfies that loan. What's he going to do with that $200 a month now? He's learned how valuable that 200 is, so maybe we'll just create a new policy for him.
Yep.
At $200 a month. Yeah.
Yep. No, I love it.
Yeah.
And folks, that's a very simple example, but that's a very practical example of how it would work. Now, insert college tuition into that, or insert future mortgage on a second home, or maybe a little Polly's, my grandchild's home, 30 years from, I might be dead by then. I don't know. By the time he's buying a house.
Yeah. I don't know. All that.
Well,
You haven't been doing much
my
running
grandmother's
lately.
96 almost, so maybe I'll still be around.
Yeah.
But the point is, enjoy the passive income from the newest generation, and they enjoy the family banking system.
Yeah. Yeah. I can't imagine what that would be like to have that available right now.
And Nelson talks about, Dave, like perpetual motion, and I'll bring up a real world example. I've got a client from last year who has been evangelizing this. This is what an ideal client does. He evangelizes to his family, his friends, everyone he can talk to, because he knows he's smart. He believes it, believes in it, and talks to his father, who's done very well for himself. He said, "Hey, Dad, will you?" I'm actually talking to the husband and wife tonight. Would you like to open up some policies on the kids and pay for them? They don't have to be big to do, what Chris is doing. Like, yeah, I'll do that.
Mm-hmm.
Great. So he's, gifting them, the premium and 12 grandchildren. So, anyway, so just fantastic of setting that newest generation up for success with money from 2 generations above them.
Yeah, and talk about the gift that keeps on giving.
Right. That's that perpetual motion that'll be created, because he doesn't, maybe not thinking about it, but he's affecting his great-grandchildren, his great-great-grandchildren that aren't even, a blip on the radar yet.
Yeah. And
that's really powerful to think about. But you have to want to do that also. You have to want to, in order to, the whole purpose of family banking, one of them is generational wealth, keeping the money close, right? Keeping the money in the family.
In the family.
Right?
in your sanitation business. I have a waste management business.
That's right. And a couple of no-show jobs too.
Yeah.
I love that show. It's the best show ever.
Yeah.
But anyway, the perpetual motion of just generational wealth. And, as the knowledge is passed on, we've talked about the knowledge being super important, because without knowledge, what do I do with this thing? Right.
Yeah.
They're good in and of themselves, but you need to utilize the policy strategically. So family banking does that.
Absolutely. Now, there might be a book we could recommend for this. I haven't read it. I think you have. Have you?
I have several times. So I did the audiobook. It's Family Banking with Purpose by Chris Bay.
Okay.
And it's a short, I've got it on Audible here. It's a short book. I think I listened to it on 1.2 speed. I'm going to just check my phone real quick just to see, make sure I got the title right. And Yep. Family Banking with Purpose by Chris Bay. It's a great little book. I've had a couple of clients actually reach out to me and said I really enjoyed it. So, but if you listen on 1.2, it's about an hour. But
Okay.
it just tells a little story about an all-American family that lots of people can relate to. And it just, man, it really gets you thinking of, wow, and in this case, the grandfather was, he was a farmer, but he was smart. He happened to link up with the right guy. The guy's name was Nash.
Yeah.
Yeah. Yep. Nash is the best in the business. And well, anyway, long story short, grandfather's, elderly, and he eventually passes away, but he had rekindled this relationship with his grandson. Anyway, so it's a great little story, but it really gets to the power of the infinite banking concept, dividend paying whole life insurance, and that generational wealth, and how it changed their lives, not only financially, but the way that the grandson was able to then kind of see the landscape change financially for himself. He quit his W-2 job, started a business because he was just miserable, grinding through his day-to-day job. And but yeah, it's a great little, I've listened to it several times. It's just really enjoyable, good narrator, and it's a good little story.
All right, good. I'll get a copy. I'll use my next Audible credit for that. Yeah, good, man. I mean, there's so many ways you could go with this family banking thing. So, and I think what you said about a grandfather who doesn't really even understand infinite banking, but the kids recommended, because a lot of times grandparents have disposable income, right? This generation there's a lot of wealth transfer that's going to happen from the baby boomer generation to the next generation. And why not spend some of that while they're alive, creating some more legacy? So even introducing, you don't have to sell them on the concept, but just sell them on something they can do for their grandkids.
Yeah. And I guess it didn't take a ton of convincing. But just fantastic. And I think, if you're listening and this is an option for you, it's something you might want to mention. Because, again, you're going to, not only do your children have so much time, especially in this case, Nelson talks about newborns, every baby gets one, right? There's so much time. And just like if you started investing young, it takes very little money relative, to create a vast amount of wealth later down the road because they have so much time on their side. And I remember a financial advisor long ago showing me, like, every year I delay doing something, it costs me, X amount of dollars 40 years down the road. And they're right. But very little premium can create a fair amount of wealth that is not going to be taxed, that's got really good guarantees. And, underwriting is minimized right at this young age, generally speaking. So it's just makes sense.
Yeah.
It just makes sense.
It does. Just lock it in, get it in there. I mean, it could be, my dad, I know we used to receive birthday and Christmas money from our grandparents. We never got to keep it. My dad just put it in a savings account for us. And when I was 16, I was able to buy a car. It's pretty awesome. So,
dang.
I mean, back when you could buy a car for less than $1,000 that actually ran.
Yeah.
So,
I remember my sister bought a car. Well, I think I lent the money for that because I was,
Oh, you did?
Yeah, I don't think I ever saw it either, but
I've done that
before. I think it was $900. It was a Dodge 600, probably in 88, 87 maybe.
Yeah.
Little four banger.
Yep.
But yeah, you're right. Yeah.
And something similar, an old Mazda, but I think I bought it for $800. And in the back seat, when I was cleaning it out, I found like $700 of cash. And I think we tried to contact the seller, but back then we didn't have their number anymore.
Nope.
We bought the car and then we
Cash
lost their
transaction.
number. You lost it was in the newspaper, the classified. I threw the classified ad away after I called the number and all that. So basically, and then I got rear-ended by a drunk driver, totaled it, got more money, used that to go buy a better car.
This is kind of like an indirect Dave Ramsey method, but with a little bit of luck.
Yeah, with a lot of luck. But that's when I learned the power of insurance. Like, oh, wow, dude, insurance is actually pretty cool. even car insurance. Like that's essentially how I bought my cars when I was a teenager. Is my cars kept getting damaged by other people, and I would upgrade.
Look at that.
Yeah.
Imagine that.
Yep. So, insurance. All right. Well, I think we hit the time limit, man.
Yeah.
So, yeah, that was good. I'm going to get that book. Thanks for that recommendation. I'll give it a listen. Would kids understand it?
Yeah,
Like
it's a very simple story. I mean,
Okay.
I think an attentive 8-year-old could understand the story, but probably 10 and up, I would say on average.
Talk to me like I'm an 8-year-old. Explain it like I'm 5.
That's the idea behind IBC, isn't it?
Yeah. Yep. Simplify it. So,
I'm
all right,
gonna
I'll get that.
simplify it.
I'll make the kids listen to it in the car next time we're on an hour and a half long trip or something out of Rochester.
Yeah. Oh yeah. Your kids could easily understand it. It really is enjoyable, and it's quick. It's an hour. So
Okay. Cool.
1.1, 1.2 maybe.
Yeah. All right. Good deal. Well, hey, thanks for sticking around, everybody. Looking forward to doing it again next week. So, all right. Well, until next time, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.